Hello everyone, welcome to this week's Investment Trends, where we discuss the latest news in the stock market and the economy. So unfortunately for this week, it looks like we are headed for weekly losses for all three major stock indexes once again. Leading things downward was the NASDAQ 100, as it is down over 4% so far this week, and the NASDAQ 100 is reaching correction territory. What that means is that it's down almost 10% from its recent all-time high. The S&P 500 was down over 3.6%, and the Dow Jones was down almost 2.9% for the week. And unfortunately, the news didn't get any better for stocks as we got the jobs report that came out Friday morning, and it was weaker than expected. We saw the unemployment rate increase from 4% to 4.1%, and many people are wondering if we are starting to see a slowdown in the overall economy. Leading the uncertainty in stocks and what drove a lot of the prices down this week was the trade wars that we are seeing play out in Washington between the U.S. and Canada, Mexico, and also China. So there has been certain sectors of the trade agreements that it looks like they have pieced out or even delayed putting some tariffs on. However, that is not the case for the broad sweeping amount of tariffs that have been issued. It does seem like it's more likely that we will see an agreement between U.S., Mexico, and Canada being resolved relatively quickly. However, the big fear is with China. So China said that they are going to fight any type of trade tariffs with us, and they will also retaliate with their own tariffs if need be. So who knows how this will play out? Obviously, something that the market is not reacting positively to, as we see, again, some continued volatility in the market, and like I mentioned, the NASDAQ being down almost 10% from its recent high. So something to keep an eye on. Typically around a 10% drop for any major index could be looked at as a buying opportunity, and on average we see one correction per year per index. So for those of you that may have some cash set aside, the treasury yields and the rates have actually declined. So it might spur more people to move money that they might have had in treasuries or money markets into the stock market. And that leads me to my next point, is that a lot of people are speculating that the Trump administration, they want to see lower rates. It's very hard to get the 10-year yield lower when you have a strong economy. So something to keep an eye on would be, what happens with not only the 2-year rate, but the 10-year rate. But we have steadily started to see those rates decline so far in 2025. That could be good for those of you that may be looking to borrow for a car or a home purchase, and could help to stimulate the economy a little bit if we do see lower rates. And again, might move some more money into stocks for people that are searching for higher yields. Also in the news this week was a lot of talk around cryptocurrency, that potentially becoming a currency reserve. So we saw a sharp uptick in Bitcoin to start the week as it went up $14,000. However, that was very short-lived, and Bitcoin still remains well off its high that we saw when it was over 100,000. It's now trading around the high $80,000 range. So a lot of the excitement around Bitcoin and cryptocurrencies again, is starting to fade a little bit as we get closer and closer into the year. One thing to note is that Bitcoin was oftentimes viewed as a way to diversify away from the stock market. However, if you look at how Bitcoin is trading, it's trading very much like the Magnificent Seven stocks. So it's trading almost very closely in line to what we're seeing from a lot of the large technology names. So it may not have been as great of a way to diversify as some may have originally thought. The one sector of the market that has performed well this year has been gold. So gold has remained steady and continues to hit new all-time highs. So that's all I've got for this week. If you are interested in leaving a comment below, please do so.